Ever wondered how government decides where your tax money goes? Why do some sectors are getting more funding while others are struggling? The answer lies in the most powerful document of the year, that is the budget. The union budget isn't just about policies or the numbers, it shapes the country's economy, it impacts your daily life and sets the direction for the national development. My name is Lalit Soni and you are watching Drishti IAS. In this video, we will break down the basics of the budget in the simplest possible way for you. So let's begin. So first here, when we are talking about the UPSC syllabus, you will be seeing that it is part of your GS3 under the title Indian Economy, and the subtopic will be government budgeting. Other than that, some of the points can be covered in the polity, like a specific article that can be asked from the constitution. Okay. Now let's see what can discuss in this video. So first we'll be starting with the constitutional provision for the budget which are given in the constitution. Okay. Then coming to the next one, budget passing process. This process is also related to polity only, because if there is a bill that has to pass from the parliament, so that process is related to the polity. So this way you can say that this forms the part of GS2 as well. Okay, coming to the next one, key facts about the budget. Herein we'll be talking about some of the important and interesting facts with respect to the budget. UPSC PYQs on union budget, that is important for us to discuss so that we can understand what is the importance of the budget for our syllabus as well. Okay, in the end there will be a practice question. So let's start. First I'd like to tell you that where in our constitution the word budget is mentioned. Interestingly, the word budget isn't mentioned everywhere in the constitution. You will be seeing that if you go through the constitution, you can read word by word or line by line, you will not be finding the word budget written in the constitution, because in the constitution they actually refer is at annual financial statement. Okay, so under article 112 of the constitution, article 112 of the constitution, you will be finding a reference to a word that is called as the annual financial statement, that is basically your budget. So if you can say that the word budget is not mentioned in the constitution, that would not be wrong. Okay, now it is a statement of the estimate receipts and the expenditure of the government in a financial year. Here they are saying that we are going for the estimation of the receipts as well as the expenditure, whatever money comes in and whatever money goes out, that record is basically your budget, and that is of a financial year which starts from the 1st of April of the current year and ends on the 31st March of the following year. Okay, so that is basically your budget. In a time frame, whatever receipts and expenditures are there, that is your budget. Okay, this is a normal concept when you are running a household also. You know that money is coming from a particular side. Your mother or father is working, they are bringing the money or the income in the household. Whatever expenditures are there, that is also a budget. Now at the level of the nation, we can say that that is your union budget. Okay, now let's move further. In addition to the budget, the budget contains, when we are talking about the statement, whatever statement is there, annual financial statement, the speech of the budget will contain different things over there, that is estimates of the revenue and the capital receipts. So here they are talking about the receipts over here. Receipts can be of two types. First is revenue and second is capital receipt. We will be talking about that later. Ways and means to raise the revenue, how you will raise the money, how will you get the income for your government. So that is basically ways and means to raise the revenue. Then coming to the next one, estimates of the expenditure. So here we have talked about the receipts. Now they will be estimating the expenditure, because obviously we are talking about the coming year. So we don't know what kind of expenditures will be there, but we are estimating it. Okay. Now details of the actual receipts and the expenditure of the closing financial year, because in the last year we have already had the receipts, we have expended the money. So basically we are writing that down as well, and we are putting that details into the parliament as well. So this is basically details of the actual receipts and the expenditure of the closing financial year, and the reasons why is there any deficit or surplus. What is deficit? If whatever expenditures, if your expenditures are higher than your revenue, okay, so that means that there is a deficit. Okay, and if surplus is there, that means that revenue is higher than the expenditure. Okay, so that is there. Coming to the next one, the economic and the financial policy of the coming year, that is taxation proposal, prospect of the revenue, spending programs, and the introduction to the new scheme. So basically these are the factors which are related to the policy. Okay, how you will be generating money, what are the schemes where you are giving away the money, all these things will be there in the budget statement. Okay, Now let's move further. Budget passing process. Now before that, I would like to tell you that we are offering IAS GS foundation courses for your prelims as well as mains in offline mode. So for English medium and the Hindi medium, batches are starting from 17 February for English medium, and for Hindi medium it is starting from 21st of February. The detail of the center is given over here, that is Noida sector 15. Other than that, if you have any query, you can call on this number, that is 87501 87501. Okay, now come back to the discussion over here, that is budget passing process. As I told you, there is a process in which a bill will be passed. Okay, so budget is also a finance bill, so it will be passed in a certain manner in the parliament. So let's see what is the manner. Presentation of the budget. Who will present the budget? So finance minister, okay, on the behalf of the government of India. Okay, so he or she will be presenting the budget. Okay, so that will be in the form of a speech. Budget speech will be there, and some document will be tabled in the parliament. Then coming to the next one, general discussion on that particular document, on that particular speech. There will be a general discussion. Then there will be a departmental committee which will be going for the scrutiny, or whatever grants they have asked, whatever money they have asked, for that they will be going for a scrutiny by the departmental committees. Voting on the demands. Once this scrutiny is done, then there will be voting on the demands. Now when there is a voting, so that particular you can say in the voting, the government should pass these bills. If they are not, that can result into the no confidence as well. Okay, so that is there. So voting on the demands will be there. Passing of the appropriation bill. Now when we are talking about this passing of the appropriation bill, that means that when you are taking money out of the consolidated fund of India, you need this appropriation bill. With the appropriation bill only, when the bill is passed, then only you can get the money out of consolidated fund of India. So that will also be there. And then passing of the finance bill. Now when we are talking about this voting, what I was referring to is that this passing of finance bill is necessary. If the passing of finance bill is not there, if the this bill fails to be passed, that means that there can be, you can say, no confidence motion. Otherwise, because obviously if government has the confidence, this bill will pass. Okay, government has the number, that bill will pass. Okay, coming to the next one, nodal body responsible for preparing the budget. Who will be preparing the budget? So budget division of the Department of Economic Affairs in the Finance Ministry, they will be preparing the budget. Okay, now let's move further. Changes introduced in 2017. So basically in the budget process, there are changes which has been introduced in 2017, because you know that in 2014 there was a change in the government. After that we are done away with the planning related aspects. So we have come up with the NITI Aayog, etc. All these changes were there. So there was some changes which has been made in the budget process as well. Okay, so considering the global standards, etc., so they have made some changes. Okay, advancement of the budget presentation to the 1st of February. Earlier it used to be passed in the last working day of the February. Now they have actually advanced it to nearly by a month. Okay, so that is there. Coming to the next one, merger of the railway budget with the general budget. Earlier what used to happen is that the general budget was different, okay, and railway budget was another document. Okay, so that was there. They were actually discussed, or you can say presented in the same day only, but the thing is in the different sections. Okay, so that was there. Now that has been merged with each other. Coming to the next one, doing away with the plan and the non-plan expenditure. As I told you that we had done we have this particular NITI Aayog, we have let go of the planning commission. At that point of time we have actually left the planning process as well. So the plan and the non-plan expenditure has also been done away with. Okay, now moving further, key facts about the budget. Now there are certain things which you should know. These are interesting facts. Okay, like longest budget speech, it was given by the Nirmala Sitharaman. She is the current finance minister. Okay, duration was 2 hours and 42 minutes in 2022-21 financial year. Okay, first budget when we are talking about, so first budget, it was actually placed in front of the parliament in 1860s by James Wilson during the time of the British era, or you can say by the East India Company. Okay, so that was James Wilson in 1860. After independence, if we are talking about, so the first budget was presented by finance minister, that is R.K. Shanmugam Chetty. Okay, R.K. Shanmugam Chetty. He has actually presented the budget after independence. Again, please remember this name, that is R.K. Shanmugam Chetty. He presented it on 26th November 1947. Okay, so this is something you should remember, because this is the first budget which has been presented by the finance minister back then, when we are talking about the independent India. Okay, now most and the least words used in the budget speech. Okay, so interestingly you will be seeing that in the budget speech the most words were used by Dr. Manmohan Singh. Okay, So that is in 1991-92. Obviously, you know that was the time of the economic reform. So that makes sense. Okay. Then coming to the next one, the least words has been used by 𝐸𝐏𝐻 M Patel. That is, the count is basically 800 words in 1977-78. Okay. Now let's move further. Who presented the most budget? If we talk about till now, most budget has been presented by former Prime Minister Morarji Desai. Presented the most number of budgets in the parliament, presenting the document 10 times from 1952 to 1969. Okay. Coming to the next one, most consecutive budget presented. So basically right now, in as per July 2024, you will be seeing that Nirmala Sitharaman, who is the current finance minister, she has broken the record of Morarji Desai for the most consecutive budget speeches. Actually, he has delivered, I guess, 6 consecutive budget speeches, and Miss Nirmala Sitharaman has presented, I guess, 7. Okay, so that is there about the most consecutive budget presentations. Okay. Now you will be wondering that I told you that finance minister will be presenting the budget on the behalf of government of India. Right now, when we are talking about the Nirmala Sitharaman, she will be presenting the budget. Earlier here, a former Prime Minister Morarji Desai has also presented it. Okay. Now coming to the next one, first Hindi budget if you talk about. So in 1955, the budget document was printed in Hindi for the first time. Until then, it was only done in English. Now the document are printed in both languages. Okay. So this is something you should remember. Now let's move further. Objective of the government budgeting. If we talk about the why actually you go for the budgeting, so first is reallocation of the resources. Now let's say there is a company which is earning a lot of money, and there is a labor which is earning a meager amount of money for the, you can say, his livelihood. Okay. So here you can see that if someone is having money, he can make more money. That can lead to the concentration of wealth. Okay. Now to make sure that there is no concentration of wealth in few hands, we go for the reallocation of the resources. Now wealth as well as of the resources. Coming to the next one, reducing inequalities in the income and the wealth, which we have discussed right now. If concentration goes on increasing, that will lead to the inequalities in the society. So by the you can say, in the form of taxes, we have progressive taxation system, wherein a person who is earning more will be paying more tax. So that kind of taxation system we are having, that is progressive taxation system. So considering that, what we are doing is, you are trying to reduce the inequalities, because those who are earning more, they are paying more tax. Okay. So that is, they are contributing to the economic growth. Now this whatever tax you are paying, that is ultimately forming the revenue for the government. Government will go for the investments that will be there. Other than that, government's job is to make sure that the households are having extra income, or you can say extra savings. Okay. So you will be seeing that sometimes if there is a tax cut, tax rate is coming down, that means that savings will increase. Okay. If savings are increasing, that means that household will have more money to invest. If household is investing, that means that economy will grow. Okay. So that is how economy is connected with each other, bringing economic stability. Obviously, if you are going for the, you can say, investments, etc., it will lead to the economic growth. Other than that, here you will be discussing the fiscal policy. Okay, monetary policy is basically the prerogative of the RBI. Fiscal policy is the prerogative of the government. Government will be discussing their policy with respect to the economy and the inflation, etc., in this particular budget document. Okay, coming to the next one, managing public enterprises. Obviously, we have PSUs. PSUs are giving you dividends. Okay, otherwise you can go for the investment, disinvestment. So that will also be done during the budget document. They will tell you that what will be the you can say path on which government will be walking. Okay, reducing regional differences. Now let's say if there is a place where you are having industry, okay, and then there is a place where you are having agriculture. So you have to make sure that whatever earning is there in the industry, you take that particular, in the form of tax, you get revenue out of it, and then you can spend over here in the areas which are having least development or the less development, so that you can actually give way for the welfare state. Okay, so that is the objective of the government with respect to the budget. Now coming to the next one, what is the component of the government budget? So here you can see government budget has two components. One is your revenue budget and second is your capital budget. Now when you are talking about the revenue, that means that the 1 year of, or you are talking about the particularly those expenditure and the revenues which are happening in that particular current year, or you can say in the lesser time. Now when you are talking about the capital budget, that is for the long term things. Okay, so these capital budget, when you are talking about, that means it will have a sway on the asset creation. Okay, and the liabilities, etc. So that is there. Now when we are talking about the revenue budget is basically revenue receipts as well as the revenue expenditure. Okay, so that is there. Revenue receipt, if we are talking about, so basically we are talking about how government is earning in a particular period of time. So here tax revenues will be there and non-tax revenues can be there. Tax revenues means that there can be direct tax or the indirect tax. Direct tax means that the person who is paying the tax, basically you can say a person who is earning money, he is paying the tax. Okay, now when we are talking about the indirect tax, these taxes will be like GST. Okay, a person who has manufactured it, but ultimate burden is there on the consumer. Okay, so that is your indirect tax. Okay, now when we are talking about the capital budget, so it can be capital receipts, like when we are talking about receipts, that is how money is coming in for the government, and the you can say capital expenditure. Now we will be talking about them in the details in the further slides. Okay, here you can see budget. When we are talking about the receipts, receipt can be of two types. One is revenue receipt, second is your capital receipt. Revenue receipt is basically in the particular period of time, or you can say for the shorter run, and capital receipts are for the longer run. Okay, let's say if government has gone for the borrowing, now borrowing will be there for some years with you, you have to pay the interest. So that borrowing coming in, that is a capital receipt. Okay, now when we are talking about the revenue receipt, that is year on year you will be getting tax, you will be getting non-tax revenue or fees or some kind of you can say any kind of you can say duties, etc., which are coming on the yearly basis. These are part of your revenue receipts. Okay, now let's see how revenue receipts are being divided. So we have tax revenues and we have non-tax revenues. Okay, when we talk about the tax revenue, that means that whatever tax is coming into the government. So tax can be of two types. One is your direct tax, second can be your indirect tax. Okay, now when we are talking about the direct tax, that means that the liability to pay and the burden of the tax falls on the same person. Okay, so that is there, like you are earning money and you are supposed to pay the tax. Okay, so that is liability to pay and the burden of the tax falls on the same person. Okay, so income tax, corporate tax, wealth tax, these things are basically your part of, you can say, direct tax revenues. Coming to the indirect tax, so the liability to pay and the burden of the tax fall on the different you can say person over here. So here you can see when you are talking about the sales tax, custom duty, excise duty, service tax, etc., these are basically part of your indirect taxes. Now coming to the non-tax revenues, so these are basically your interest receipts. Okay, these are different from the one which you are getting from the taxes. So here you will be getting profits and the dividends from the PSUs, etc., or any kind of investment government is having. For that you are getting a profit or the investment, sorry, dividend, that is basically part of your non-tax revenue because it is not coming from the taxes. Okay, then interest receipts, then fees, fines, and external gains, all these things will be coming under the non-tax revenue. Now coming to the capital receipts, if we are talking about this component, so these are basically those you can say areas wherein you will be having the recovery of the loans, disinvestment, etc. Okay, now if you are going for the recovery of the loans or the disinvestment, that means that you are either lessening the liability because you are actually recovering of the loan, you are getting some money out of it, and then when we are talking about the disinvestment, you are basically reducing your assets. If there is a PSU, you are going for the disinvestment, that means that you are selling your assets. So that is something which is happening over here. Now coming to the borrowing and the provident funds. Okay, now borrowing or the provident fund, whatever money which is with the government as a form of a trust. Okay, in the provident funds, that money can be there for the government, but that is basically a liability. Okay, why? Because government has to return this money to the person to whom this provident fund belongs to. Okay, other than that, borrowing, if you are borrowing from a particular nation, let's say you have taken a line of credit from Japan. Okay, now this is the liability which you have to pay ultimately. So basically here either you are reducing the assets or you are increasing the liability. Okay, now coming to the next part, that is basically the expenditure part. Now till now we have talked about how money is coming in. Now we are talking about how money is going out. Okay, so revenue expenditure, so basically here we are saying that in a particular lesser time period or the year, whatever money is going out, okay, how government is spending in a year, so that is their revenue expenditure. Okay, so expenditure which neither creates asset or reduce liability. So basically here we are saying that it does not have to do anything with the liabilities or the assets. Okay, so that is there, like payment of interest, payment of salaries, pensions, grant and subsidies, education and the health services, defense services. This is something which government has to provide. These are the some of the expenditure which government has to do it on daily basis. Okay, so basically revenue expenditure are those expenditure you can say that for the normal administration or running the country, these expenditures are to be done on the daily basis. Okay, Coming to the second one, that is your capital expenditures, that is your long term expenditures which are there. Okay, so let's see. Expenditure which creates assets or reduce liability, that is there. Construction of the roads, so this is basically your creation of the assets. They are saying that creation of the assets or reduce the liability. If you are creating a road, that means that you are creating an asset. Coming to the next one, purchase of the land and machinery. If you are purchasing some machinery, that is also a capital expenditure, that will increase your assets. Okay, that is kind of an investment. Again, investment in share, loan to the states or the foreign government, repayment of the loan, etc. Okay, coming to the next one, what are the different type of budgeting methods? Okay, so we have seen what is budget, we have seen what is budgeting. Preparing for the budget is basically budgeting. Now zero based budgeting. Basically, if you are starting the budgeting process from scratch, okay, you are not taking any kind of base year, etc., in that case it is called as the zero based budgeting. Okay, so let's see. In the current year's budget is prepared from the scratch without considering the budget of the previous year, that is zero based budgeting. Coming to the next one, traditional budgeting. Herein we are going for the reference from the last year. Okay, so whatever balance sheet is there from the last year, on the basis of that we will be going for the next year's budget. So that is traditional budgeting method. Now coming to the next one, that is your outcome budgeting. Okay, outcome budgeting, that means that whatever money has been given to the various department, okay, we will be seeing that what is the outcome over there. So let's see. Outcome budget analyze the progress of each ministry and the department, what the respective ministry has done with the budget outlay, whatever money we have given to you, what have you done with that. Okay, it measures the development outcome of all the government programs. It was first introduced in 2005. Okay, I hope that is clear. Coming to the next one, gender budgeting, if we are talking about, so it is clear with the term itself that we are considering the sensitivities towards the gender as well. Herein we are talking about the gender equality. Okay, so a kind of budget which is having all the components, which is trying to, you can say, make sure that we are promoting the gender equality, that is your gender budgeting. Okay, I hope that is clear. These are the types of budget which is there. Coming to the next one, measures of the government deficits. Okay, now revenue deficit. Revenue deficit means that whatever revenue expenditure is there, okay, and whatever revenue you can say receipt are there, whatever difference is there, that is basically your deficit. Okay, whenever you have expenditure which is more than the receipts, okay, so herein you will be seeing that we are having a deficit. Okay, if your receipts are more than the expenditure, in that case you will be saying that we are having a surplus. Okay, right now we are talking about the revenue deficit. So basically it is referring to the excess of the government's revenue expenditure over the revenue receipts. So formula is given, revenue expenditure minus revenue receipts. Such transaction that affects only the current income and the expenditure of the government, that is basically your revenue receipts. Now herein what they are trying to say is that these are the, you can say, when we are having a revenue deficit, that means that government is not able to run their ordinary functions. Okay, because as I told you, when we are talking about the revenue expenditure, that means that is the daily expenditure which is there to run the government, run the administration. Okay, if you are not able to do that, then if there is a revenue deficit, that says that government does not have enough money to run their administration. Okay, so that is there. When the government incurs a revenue deficit, it implies that the government is saving and using up the savings of the other sectors of the economy to finance the part of the consumption expenditure. Here is what they are saying is that the government does not have such money, so whatever savings other you can say sector of the economy is having, we are actually using that to finance this deficit. Okay, coming to the next one, fiscal deficit. Fiscal deficit is basically the gap between the government's expenditure requirement and its receipts. Okay, whatever expenditure requirement, whatever requirement is there, let's say I have a requirement of 1000 crore, okay, and I am getting money that is basically only 900 crores. Okay, so whatever 100 crore gap is there, that is basically your fiscal deficit. Now how will you build the gap? So basically you will go for the borrowing. So what is fiscal deficit? Fiscal deficit is basically the money which government is borrowing. Okay, so that is given over here. Fiscal deficit is the gap between the government's expenditure requirement and its receipts. It indicates the total borrowing requirement of the government from all sources. Okay, coming to the next one, measures of the government deficit. Okay, here when we are talking about the first one, we have discussed the fiscal deficit, we have discussed the revenue deficit. There is another part, that is primary deficit. So basically, if whatever fiscal deficit is there, fiscal deficit is what? That is your government borrowings. Okay, so if out of the government borrowings, if you are taking away the interest, whatever interest is paid by the government on these borrowings, if you are taking that out, that is giving you primary deficit. Okay, so that is basically your primary deficit. Whatever borrowings are there, we are taking the interest out of it. Okay, so that is primary deficit. So this is basically whatever things you need to know for the budget. These are the basics of the budget. When budget will come, we will come again with you, we will be discussing the budget. Now we will be seeing some of the PYQs over here. Okay, so let's see. Consider the following statement. This is the PYQ from 2015. The Rajya Sabha has no power either to reject or to amend a money bill. Rajya Sabha cannot vote on the demands for the grants, and Rajya Sabha cannot discuss the annual finance statement. Now let's see. Rajya Sabha has no power either to reject or to amend a money bill. Okay, so that is fine. Coming to the second one, Rajya Sabha cannot vote on the demands for grant. Obviously, Rajya Sabha cannot vote for it. Okay, so you can eliminate the second one. Now coming to the next one, Rajya Sabha cannot vote for the demands of the grant. So obviously this statement is true because Rajya Sabha does not have that kind of power. Rajya Sabha cannot discuss the annual financial statement. Now this is wrong. Rajya Sabha can discuss, but they cannot recommend any kind of amendment. Okay, so third one is wrong, or you can say the here. When we are talking about the first one, Rajya Sabha has no power either to reject or to amend the money bill. That is also correct. So 1 and 2 is correct. Option B would be your right answer over here because they are asking you about the correct one. Okay, option B is the right answer. Article 1110 of the you can say constitution says that the finance bill can only be introduced in the Lok Sabha, and Rajya Sabha will not have power with respect to suggesting the amendments or doing the amendments. They can only discuss it. Okay, and Rajya Sabha can suggest some amendments, but Lok Sabha may or may not receive it. Okay, or you can say accept it. Now coming to the second statement, demands for grants are part of the annual budget which are exclusively voted by the Lok Sabha. Okay, so here Rajya Sabha does not have any power. And when we are talking about the last statement, that is the annual financial statement, that is budget, is laid before the both houses of the parliament under Article 112. Rajya Sabha can discuss the budget but cannot vote on the demands for the grant, which we have already discussed. Coming to the next statement, question. With reference to the union government, consider the following statement. This is also a question which is asked in 2015. The Department of Revenue is responsible for the preparation of the union budget. I told you that is not. That is basically, you can say, the Department of the Economic Affairs. Okay, that is under the Ministry of Finance. So statement 1 is incorrect. Coming to the second statement. No amount can be withdrawn from the Consolidated Fund of India without the authorization of the Parliament of India. That is obviously correct statement, that appropriation bill is required for that. So once the Parliament votes upon that, after that you can go for the you can say Consolidated Fund of India, wherein you can withdraw the money out of it after the appropriation bill is passed. Okay, all the disbursement made from the public account also needs the authorization of the Parliament. Now this is incorrect because when we are talking about the public account, that is a kind of government is holding that account as the trust. Okay, so for that you don't need any kind of, you can say, authorization from the Parliament. So statement 3 is incorrect. Now statement 1 is incorrect. Only 2 would be your answer. Option C is given over here, that is only 2. Okay, the explanation I have given. There are some important articles which has been given over here, so you can actually go through these articles. Okay, now you can take the screenshot if you want. Now moving further to the next one, regarding money bill, which of the following statement is not correct? They are asking you about the incorrect statement. Okay, so a bill shall be deemed to a money bill if it contains only provision related to the imposition, abolition, remission, alteration, or the regulation of any tax. Okay, we will consider that. Now moving further, a money bill has provisions for the custody of the Consolidated Fund of India or the Contingency Fund of India. Okay, coming to the next one, a money bill is concerned with the appropriation of money out of the Contingency Fund of India. Then coming to the last one, the money bill deals with the regulation of borrowing of money or giving of any guarantee by the government of India. Now option C, if you see, they are talking about money bill is concerned with the appropriation of money out of the Contingency Fund of India. Now that is not the correct one. Contingency Fund of India is basically a fund which is there with the president. So option C would be your right answer over here. Other than that, all the statements are correct. Okay, so statements are given over here, you can read them. Coming to the next one, consider the following statement. It is a question from 2020. The President of India can summon a session of Parliament at such place as he thinks fit. Now this is correct. Coming to the next one, Constitution of India provides for 3 sessions of the Parliament in a year. Now this is incorrect. You don't have to read the full statement because they are talking about the 3 sessions. There is no mention of such sessions. What they have said that they have said that there should not be a gap more than 6 months. Okay, so that statement is incorrect. There is no minimum number of days that parliament is required to meet in years. Now this is also right. There is no mention of minimum years, minimum number of days. Okay, so here you can say 1 and 3 is your right answer. Option C would be your right answer over here. Okay, so this is given over here. You can go through this. Mostly they will be talking about the article 85, wherein all these provisions are given. Okay, coming to the next one. Along with the budget, Finance Minister also place other document before the Parliament, which includes the macroeconomic framework statement. The aforesaid document is presented because this is mandated by a long-standing parliamentary convention, Article 112 and Article 110, Clause 1 of the Constitution of India, Article 113 of the Constitution, provision of the Fiscal Responsibility and the Budget Management Act 2003. Option D is your right answer. When we are talking about the macroeconomic framework statement, that is mentioned in the provision of the Fiscal Responsibility and the Budget Management, that is generally called as the FRBM Act. Okay. So there are 3 documents which are required by the FRBM Act, that is basically macroeconomic framework statement, medium term fiscal policy statement and fiscal policy strategy statement. Okay, so this is about the UPSC PYQs. Now there is one more, that is from you can say 2024. With reference to the union budget, consider the following statement. The Union Finance Minister on the behalf of Prime Minister lays the annual finance statement before the House of the Parliament. Now this is incorrect because this is not on the behalf of the Prime Minister, this is on the behalf of the Government of India. Okay, so first statement is incorrect. At union level, no demand for a grant can be made except on the recommendation of the President of India. Now this is correct, so you can say that option B would be your right answer, that is only 2. Okay, so this is about the UPSC's PYQs. Now for your practice, there is this one question: which department is responsible for the preparing of the Union Budget of India? Department of Revenue, Department of Economic Affairs, Reserve Bank of India and Niti Aayog. We have already discussed that, so you can attempt this question and answer to me in the comment box. With that, I would like to take your leave. When the budget comes, we will come again in front of you with the budget, so let's wait for that. And with that, thank you, have a nice day, and please subscribe the channel.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.